If you're just starting to invest, you might be wondering, should I buy individual stocks or start with ETFs? The truth is, both can build wealth, but only one is better suited for beginners. In this video, I'll walk you through the differences, the risks, and how you can grow from beginner to confident investor, even using some of the strategies from the world's top stock pickers. What is an ETF? Let's begin with ETFs. Exchange-traded funds. Picture a basket that holds hundreds of companies. Instead of buying one individual stock, you buy the entire basket in just one trade. Example? An ETF that tracks the S&P 500 gives you exposure to companies like Apple, Amazon, Google, Visa, and more, all at once. You get diversification, lower risk, minimal research, and consistent long-term growth, often 8 to 10% annually. It's a passive way to build wealth, great for busy people who don't want to analyze charts and earnings reports every week. What about individual stocks? Stocks offer more control and more potential reward, but also way more risk. When you buy a single stock, you tie your performance to one single company. That means you need to analyze its growth, watch its earnings, study market leadership, and time your buy and sell decisions. Most beginners don't have a system. They buy based on hype, tips, or emotions. That's where losses happen. So which is better for beginners? For most people just starting out, the answer is clear. Start with ETFs. Why? Instant diversification, lower emotional stress. You don't have to pick winners, you can build consistent habits. Think of ETFs as your training wheels. You learn how investing works and attend without crashing when one stock fails. When to start picking stocks? So, when should you start picking individual stocks? Once you've learned the basics of the market and you're ready to follow a disciplined system. That's where strategies like the one used by legendary growth investors come in. For example, a rules-based method like Ken Slim focuses on current earnings, growth, annual return trend, new product, leadership, or price high supply and demand, volume patterns. Leader versus laggard stocks. Institutional sponsorship market direction. It's not about guessing. It's about buying strong stocks in strong markets with clear entry and exit rules. That's how real money is made with stocks. Not with hype, not with emotion. Common mistakes. Beginners make. Most people fail with stocks because they buy based on headlines or rumors, don't have sell rules, hold on to losers too long, ignore the overall market trend. Even experienced investors stick to rules. If you don't, your stock portfolio becomes gambling. Final word, the smart way to start. Here's the smartest approach. Start with a low-cost ETF like an S&P 500 or global index fund. Build the habit. Invest monthly, let it grow. Study investing while you grow your money. Then, when you're ready, pick stocks using a system that works, whether it's Ken Slim, value investing, or another method. The key is to treat it like a business, not a game. Want help getting started? Download my free guide. Single stock rules checklist, linked in the description. ETFs are the foundation. Strategy turns you into an investor. Let's build both together. This video is for informational and educational purposes only. It is not financial advice.